Hey everyone, welcome back to Monterey, California. Toby Fernie here with Coldwell Banker Realty. We're coming up to everyone's favorite season, not spring, tax season. Right up there with your level of enjoyment as your annual trip to the dentist. One of the many benefits of being a homeowner is the ability to write off certain expenses when it comes time to do your taxes.
Oh, and who pays for it?
Nobody. You write it off.
Who writes it off?
I don't know. The write-off people. What? Why are we having this conversation?
So if I need booze to get through my day, I can just write that off?
That's a stretch.
Please keep in mind that I am not a CPA. I don't even play one on YouTube, so you're going to want to consult with a CPA before you move forward with filing some of these real estate tax write-offs. Let's get into the list. Capital gains tax. Capital gains is the term that is used for the profit that you make after selling your home, after you deduct the balance that you have for your mortgage and your expenses. I'll be going over which of those expenses that you can write off in this video too, so stay tuned for those. You can write off up to $250,000 of your capital gains if you are a single person, $500,000 if you are a married couple. So if you sold your home for $800,000 and had a balance of $500,000 left on your mortgage and spent $50,000 in expenses while selling your home, that would mean that you had a capital gains of $250,000, which means you could write off the full amount. So which of those expenses are you able to write off as a homeowner? Repairs and home improvements. Many sellers elect to go through home improvements as they're getting their home ready to sell it on the market. If you have made any repairs or improvements to your home within 90 days of listing your home to put it on the market, make sure that you save those receipts as you will be able to write those off when it comes to your taxes. Costs to sell your home. There are going to be inevitable costs that will happen when you decide to sell your home. In the state of California, sellers tend to shoulder the majority of the costs associated with selling a home. For example, here in Monterey, a seller is going to need to do a city report where somebody from the city comes in to check the home, make sure that everything is up to code and there hasn't been any unpermitted work that needs to be done. There is a caveat that this must be your personal residence, not an investment property, and you must have lived in the property for at least 2 of the last 5 years to write off those expenses associated with selling your home. Property taxes. When you are paying for a mortgage, your lender will likely explain to you the cost as the PITI. That is your principal, interest, taxes, and insurance. All of that is wrapped together into your mortgage payment. Some of those property taxes that you're paying on a monthly and yearly basis can be written off, so make sure that you check with your lender and your CPA. Mortgage insurance, that is the I in the PITI. Just like your property taxes, your mortgage insurance can be written off in the year that you are selling your home. These are itemized deductions, so you'll have to figure out if it makes more sense to do the standard yearly deduction for being a homeowner or if it's going to be more financially beneficial for you to move forward with these as itemized deductions.
That's a write-off?
Yeah.
Do you even know what a write-off is?
Yeah.
If you have any questions about real estate or living here in Monterey, California, feel free to give me a call or send me an email at toby.fernie@gmail.com. Like and subscribe. Stay tuned for future content all about real estate and living here in Monterey, California.